Good morning. Welcome to the Employer Training Virtual Workshop. When contacting State Employees Retirement System, you will see here our postal address, phone number, email address, and Employer Services login. Talking about the Employer Services login. So logging into State Retirement System, you will type in srs.illinois.gov. As you see here, there are 3 retirement systems on that home page. So you're going to want to make sure you click on State Employees Retirement System, as signified here in the upper left-hand corner. By doing so, it lands you here, which is our home page, State Employees Retirement System. Below the main banner screen, you will see a section titled Employer Services Login. Click Employer Services Login will land you here. This is the sign-in page from which you have to initiate access to your Employer Services dashboard. Remember, for agencies with email domains synced with Okta Workforce, you will have to use that work email address to access your website. Agencies that have the following email domains do not have their email synced with Okta Workforce. In order to do so, these agencies will need to open a ServiceNow ticket with DoIT by calling 217-524-3648 before that agency can appoint a security administrator or assign any roles. Back to the home screen, you'll see a second block below the banner screen that reads Employer Resources. By clicking on that box will display this page, which you will see lists all of the titles associated with Employer Services responsibilities. The categories or job titles are displayed in the columns up and down the left-hand side of this page. Third one down reads Security Administrator. So the Security Administrator appointment request process is such. You'll need to log into Employer Services, click the arrow next to your name in the top right-hand corner of the screen. From that drop-down menu, you'll see Security. Click on that box. And here you will need to click to download and complete the Agency Security Administration Appointment Request Form for a new Security Administrator. This form is online fillable. You'll need to fill out the form completely. Then click the button Email to SRS located within that form. It will attach it to an email. You will then be required to send the email to the previously addressed or self-populating employer access request. This is what the form Appoint Security Administrator looks like. With regards to assigning roles, such as Retirement Coordinator, Payroll Coordinator, Tier Determination Users, we'll talk about that process now. Again, you'll need to log into your Employer Services account, go to your dashboard, and under the Security Administrator tab, you'll have displayed this list of functions. Click it and go to the User Management selection. If this is for a new employee, you're going to click Add New User. Search for that employee within your agency's database by using the search function. Once they are found, select that employee. Then below, you will assign them whatever tasks you want assigned to that person. These roles can be, you can select this person to have the job duties of all four, let's say, retirement coordinator, payroll coordinator, signature designee, and tier determination user. Or in some of the larger agencies, some of these folks may only have one or possibly two of these duties, but this is where you're going to determine what their security access will allow them to submit. Make sure you select the proper agency. Click Verify Email, and then click the Save button. You'll also see there's a button here that says Manage Pay Codes. If the user is a tier determination user, go ahead and skip this step. Click the appropriate pay codes and click Save. If the user is a tier determination user, skip this step. For example, some of the agencies have multiple pay codes. Make sure you're assigning this person the correct duties over their specific pay codes. Click the email address under the Okta username heading. That process reviews how the roles are assigned to new employees, or if you have ongoing employees, should their roles change. Now we're going to talk about how to correct or remove assigned roles. You're going to log into Employer Services once again. Go under Security Review this time instead of User Management. This will give you a listing such as the screen display here, showing you what employee has the rights and job duties assigned to that person. The security admin should then go to remove any employee with duties that they are no longer responsible for, or if their job status has changed, such as if they've left or taken on a new position. Click Security Admin. Click the User Management this time. Click Edit User. This will take you back to the screen where you select what duties you want assigned to this specific employee. Again, save, and with the exception for the tier determination users, otherwise click Continue to Step 7. And again, you have a chance to go back and review which pay codes you want assigned to this specific person. Should you have omitted a pay code that you now want them access to, or vice versa, and you no longer want them administrating that pay code. From this screen, you select those pay codes and hit Save. If you're having issues after these steps, click delete user and then add new user to add the user as a new employee. Sometimes it's easier just to start over and assign them the correct duties for the correct pay codes from the beginning. And again, you're going to want to update the Okta email address of a user. Click the email address under the Okta username heading to correct that. We're going to talk about the security review function. Again, you're going to sign in to Employer Services. Go back to that Security Administration. Go back under the Security Review. Click that. Select the options you want to keep or remove from employees from their already designated roles. With regards to the employer dashboard, the employer dashboard is your home page as an employer. The dashboard gives you a brief synopsis of what you have access on the website. You can access the employer dashboard by clicking on the dashboard icon in the main menu bar. Announcements will be displayed at the top of the dashboard, providing notifications of system-wide changes and events. An announcement can be dismissed by clicking the X in the upper right-hand corner of the announcement. Notifications will provide a total count of messages in your inbox and specifically any unread messages. You will have the access to various employer functionalities and the counts based on the status. If you have access to the service purchases estimate requests, tier determination requests, return to work retirees, and employees on disability. At the bottom, legal terms and conditions of the SRS Member Services website are available to review. So again, logging into your employer dashboard, you'll see here that dashboard on the banner in the top right left-hand corner is your way to always exit what task you're in the middle of and immediately go back to this screen here where your dashboard is represented. The bolded text simply tell you what topic that is. As you can see, you have notifications, payroll deductions, employer statements, service purchase estimate requests, tier determination requests, 2025 retirees return to work retirees, and employees on disability. All of those are available for you to work on. Anytime you go into one and you want to go back to your dashboard, simply click on that dashboard tab. Now we're going to talk about completing employer reports. So when you click on your dashboard and you see employer reports, a member profile report to view and print a summary of your member's account. Maybe if they want to ask you a couple of questions, simply click on member profile report. Search that employee. You can use them by name, social security number, member ID, whatever you feel comfortable with or what is easiest for you to identify that member. Once you've identified them, you can hit generate report and you'll get a page report, basically a summary of everything this person has on file with SERS. If you go back to that employer's reports and you click on the agency employee listing report, you can click the agency itself, whatever agency you're employed with, hit generate report, and this will give you a listing of all of your employees under your jurisdiction, so to speak, uh, giving you some information on one, if they have, if we show that they have signed up for member services, which is a huge push for us. We're trying to get everybody signed in to their member services account, and also if they're what their eligibility looks like as far as are they eligible to retire currently, so you know in within your office who is eligible to retire maybe in the next 6 to 12 months. But then also if we have a beneficiary form on file and when it was last updated. So you've got yes, no, and then if you see there, it's been over 10 years since it's been updated, meaning we have one on file, but it's quite old. Then we're going to talk about the employee lookup member services. So again, on your main page, you can do a search, my employee lookup. Again, anytime you're searching a person in our database or on, through your member services, through your employer services functions, you can always use it by name, name and last four, the full SOCH, member ID number, any combination that will designate or determine that employee. Just be aware that when you have employees with common names, sometimes the name search isn't the quickest, easiest way to that employee. You can use a combination maybe of Smith followed by 1234, and then that would get you to that exact John Smith directly, and that would be the only person listed in this list instead of having multiple Smiths identified. Once you've identified this person, you're going to see pretty much the exact same view the employer has of their member services website. And again, you'll see there's a series of buttons going up and down the left hand side, as well as a series of tabs running horizontally across the top. But the landing spot typically is the SCRS membership record on the basic tab. For Tier 1 members, the tier summary will display the type of account transaction used for the Tier 1 coding. The tier summary data is to be printed and used by agencies to code payroll and within personnel packets and files. Same thing goes for Tier 2 members. There will be an additional warning will display stating that the member is currently coded as Tier 2 but could qualify to be changed to Tier 1 based on service with the reciprocal retirement system. Simply meaning this person's in a Tier 2 status until it can be definitively determined whether or not they had service credit in a reciprocal system earlier than 1/1 of 11, January 1st of 2011. If they had time in a reciprocal system earlier than that, this will flip their tier status from a Tier 2 to a Tier 1. If the system cannot determine if the member is a Tier 1 or Tier 2, the tier will display as unknown. For all members with an unknown tier, a tier determination request must be submitted via clicking the Submit button to the SRS Accounting Division to determine the member's correct tier. As you go horizontally across those buttons. The next one to the right reads Account, and this is simply the Account tab will display account information such as the member's total service credit, total contributions, the current final average compensation number, and the earnings and service credit information. That earnings and service credit by calendar year that's underlined will give them a chart that displays how much they were paid month by month for as long or any time that they were paid on a state payroll. Going one more tab to the right under the Benefit tab, the Benefit tab will display the benefit estimate information, including estimates of the member's retirement, disability, death, and survivor benefits. If the member has reciprocal service with another agency, the record will also be displayed in this tab. Not the dollar amount they can expect from that agency, just the fact that we show they have reciprocal time in at that reciprocal system. Now going down the buttons on the left-hand side, the next one down reads Demographics. The employee's demographic record will display the member's profile information, current address, current phone number, and current email address. The next button down reads Forms and Applications. Under the Forms and Applications, a selected group of pre-populated PDF forms are available for you to fill out, print, or email to the employee. These forms are specific to the selected member and contain specific member information. If you are printing or emailing these forms for an employee, please make sure you have the correct employee selected before providing the employee with the form. Using Adobe Reader, you can open the form, complete the form electronically, save changes so that you can submit the form to SRS. Click on the form name, for example, the beneficiary nomination, to open or download the pre-populated PDF form. Disability, pension, and termination refund packets are also available on this tab. They reside further down this page. You just can't see them from this screenshot. Under the nominated beneficiaries, the date in which the employee last updated their beneficiaries with SRS is available for review. To update beneficiaries, the Form 101 Beneficiaries Designation Form is available under that Forms and Applications tab. When using the Global Employee Search button, alternatively, you can use the Global Employee Search to quickly search for an employee to view their membership record. The Global Employee Search uses the same criteria as the Employee Search on the My Employee Lookup page, i.e. you can put in last name, first and last name, full Social Security number, any combination of those in order to pull up your specific member. We're going to talk a little bit about the pension and death benefit information. When asked how soon can I retire under Tier 1 regular formula, the criteria has to be fully met, in which the member is 60 years old with 8 years of service credit. They are now eligible. They qualify under Rule of 85, in which their age and service equal 85, and at any age with 35 years of service credit. So remember, Tier 1 members are individuals who became a member of SCRS or a reciprocal system before January 1 of 2011. Those members need 8 years of service credit to become vested. The FAC stands for Final Average Compensation, in which we find the highest continuous 48 months of earnings out of their last 120 to compute that FAC dollar amount. Coordinated employees are employees who pay into SRS and Social Security. Non-coordinated employees are employees who pay into SRS only. These folks do not pay into Social Security while working for the state. When it's discussed about Tier 1 alternative formula, how soon can they become eligible to retire? They fully have to meet both criteria again, meaning they have to be at least age 50 and 25 years of service credit. They have to at least be age 55 with 20 years of service credit to be deemed eligible to retire. There is no rule of 75 for any alternative formula folks, meaning you can't be 51 with 24 years of service credit. That individual would have to work one more year where they would be 52 with 25 years of service credit. Then both of those criteria are fully met and that person would become eligible to retire. In regards to Tier 2 members, how soon can they retire? The criteria has changed. They have to be at least age 67 with 10 years service credit. A Tier 2 member is an individual who became a member of SCRS or a reciprocal system after January 1 of 2011. They need 10 years of service credit to be vested. Their FAC, or final average compensation, is calculated by the highest 96 months, consecutive months of earnings out of the last 120. And the status for coordinated and non-coordinated remain intact, meaning coordinated Tier 2 employees pay into SRS and Social Security. Non-coordinated employees pay into SRS only. They do not pay into Social Security. Again, for Tier 2 folks, the rules or criteria have changed a little bit. For alternative formula folks, they can retire at age 60 with 20 years of alternative formula service credit on their account, with certain non-coordinated job positions becoming eligible to retire at age 55 with 20 years of alternative formula service credit. Displayed here is a list of those folks who can retire at age 55 with 20 years alternative service credit. You'll see the majority of these are identified with the designation that they are considered sworn, or most likely they have to carry a sidearm. When granting service credit, this is how we appropriate service credit. For monthly employees, they have to work 15 or more days. They get a full month service credit. Anywhere between 8 and 14, they are granted a half month. 8 days or less, or I should say less than 8 days, they are granted a quarter month. So if you have someone that says they have 10 and a quarter months, most likely they began at the later end of a month. Therefore, they did not have the ability to work more than 8 days in that initial month that they began working. Therefore, they got a quarter month for that first month. Dealing with sick and vacation days and how they can help with your pension. They can help meet the eligibility criteria to make a person eligible to retire. Once eligibility has been met, they would simply increase the pension amount, and they do count towards the free insurance premium. On the SRS homepage, under the calculator button, which sits below the banner photo to the far right, the third item down is a sick leave and vacation chart. If you click on that link or that line, you'll get a display of this. This is how we convert days, benefit time days, to service credit. You use this chart for both types of payable and non-payable time to add 2 blocks of service credit that can both then be added at the end of your career. But remember to calculate these independently: non-payable benefit time and payable benefit time. Depending on when you started or when your members started their career, this is how benefit time accrued throughout the history of their employment. You'll see there's a period before 1984 where it was just used for free service credit. There was a block of 14 years in the middle there where you got paid out for half. And then anything after 1/1 of 98, it went back to just using sick days as free service credit. So you do have to be mindful of when and where you put your members' sick time in the correct fields. Just as an example, we threw this one out there. A member that ended their career with 67 payable benefit days, vacation days, would get them 3.25 months of service credit. We would require contributions collected off that lump sum payment to establish that 3.25 months. The unpaid or non-payable sick would, by turning in 130 days, would simply grant them 6 months of service credit free. So this person has the ability to establish 9.25 months of service credit on their account if they ended their career with 67 vacation days and 130 sick days. You'll see also on that calculators tab, the second item down reads service credit calculator. If you clicked on that line, it will land you here on this page, which again, you'll see it's broke out into categories of benefit time. You'll see there listed a category for unused sick days earned before 1/1 of 84, unused sick days earned after 12/31 of 97. That third one down is where you're going to add or input those sick days that were earned between 12/31 of 83 and 1/1 of 98. Those are the ones that are paid out at half. Then you add the unused vacation days, half the unused personal days. Hit calculate, and the bottom field would display how much service credit would be granted from entering the amount of benefit days in the proper fields. Reciprocal systems. Again, there are 13 throughout the state. Here's a list of all of them. Members with questions regarding reciprocal time should just contact SCRS directly. Employer statement instructions. So again, you're going to log into your employer services account. From your dashboard, select your employer statements. There's a new feature out here. If you have a member asking you what their benefit time's worth, this will just use a calculator, if you will. It's not tied to any of their accounts. You simply click on the payable benefit time calculator. Select a plan tier, retirement date, input the monthly rate of pay, and then your sick and vacation days, and click calculate. This will give you an estimate for you to share with your employee as to what the value of their sick and vacation time is worth to their account. Most of them only want to talk about how much cash value their vacation time's worth, which is fine. You'll see in this example that they're going to be paid for 20 days, but the service credit they're actually buying to establish that 1 month of service credit is only going to be calculated off 11, since that is the lowest number that will get you 1 month of service credit. So you'll see here what the total payment is approximately the 9,000, but the contributions due is only 4% of what that daily rate of pay is times 11, not the 20. And again, that button, that create estimate, is a new function just so you guys have a tool at your disposal to help answer questions with retiring members who come in and ask, what's my vacation time worth? It's just an estimate. It's a standalone calculator, so you can use it for any employee. When you are filling out their employer statements in regards to retirement, you're going to click the employer statements field, select the appropriate employee. In case they're not on this first page, you can use the search bar. By selecting them, you will go through the steps outlined that mimic the old 3900 form. Starting by the last day the employee physically worked, you are going to use the drop-down calendar or type in the date using the month, day, 4 digits for the year field. And from this, you are going to input the last day the employee physically worked. The next question you're going to ask is the last pay period employee wages were due, either the 15th or the end of the month, and indicate the last day of the pay period the employee was paid. The date the employee was removed from payroll, this is where you're going to indicate the day, indicate the pay period ending date of when the employee was removed from payroll. So again, that's the pay period ending date from when they were removed from payroll. Next question down is going to be, has the employee returned to work? If the employee is returning as a 75-day employee or on a contract, you're going to answer this no, because he is not returning to work in a full-time capacity. If he is returning to work in a full-time permanent employment position, you simply answer yes and enter the date the employee returned to work. Date returned to work. The date returned to work is the day the employee physically returned to work. Under the reason for removal field, you'll see a drop-down menu. Use the drop-down menu to select the reason for the member's removal from employment. For retirement purposes, it's going to be resignation. The effective date of action is self-explanatory. The effective date is coming most likely off the letter of resignation, typically the end or last day of a month. Now you're going to start describing the sick time on this form, or vacation time. And here you're going to identify the total unused sick days earned prior to 1/1 of 84, The next field down says the total number of unused sick days earned after December 31 of 97. And that next one tells you or asks you to include the total unused sick days earned after December 31 of 83 and before January 1 of 98. So remember, that's why it's important to enter the correct information in the correct fields. If you had somebody that started in 2000, May 1 of 2000, all of their time is going to be entered in the field after December 1 of 97. So you won't have to enter anything in the other fields. But be careful to make sure you enter the correct amount of sick days in the proper field. The number of unused sick days remaining for pension calculation, this is automatically calculated by this form. So there should be, if you had some sick time that was in that 14-year period of half paid, this should populate with a number of days that will get added back to the non-paid sick total. The employee base rate of pay is exactly what it is. You're going to enter the rate of pay at the time of separation of employment. Employee work status, whether it was a full-time position or part-time position, you simply select one from the drop-down menu. The total rate of pay, this field will include the base rate plus any longevity, bilingual, and permanent differential supplement pay included to the base rate. So these pay rate fields could be the same, or there could be some different values you are adding to this field due to the member receiving supplemental pay for longevity, bilingual, or permanent differentials. Next one down is the frequency of pay. Simply select one of the pay methods from the drop-down menu: biweekly, daily, hourly, monthly, or semi-monthly. The next question is going to be, will a 1404 be processed? Select yes or no from the button menu. Selecting yes will make the applicable questions appear. Selecting no will keep them hidden. If you selected yes, enter the amount of vacation days, total unused personal days, and the estimate ready for and is the estimate ready for member election. When you select yes to the estimate, the member will be able to make the election on their member services account. Remember, this is a new function for some, and basically it's taking the 1404 election question off of the paper form and putting it out on their member services account. Under the service purchase options, you'll see a sick and vacation election option now. By clicking on it, this is the page your members will be seeing on their member services page. They are simply asked to answer, do they want the contributions that you're about to take from their lump sum payment collected on a pre-tax basis, a post-tax basis, or do not collect the retirement, in which case the service credit will not be granted and added into to increase their pension. By selecting confirm sick and vacation election, it will give them a second screen, which will give them a summary of what that payment looks like. This is going to be very similar to your pension or to your lump sum benefit calculator estimator that we talked about a few moments ago. They simply have to click the two boxes, understanding that they authorize the deduction and it's a legal signature, Hit submit. It comes back to you as completed. You will need to enter an estimated number of days in some of these fields, as the member will make the election while they are still working. When the agency submits the form, the number of days must be the final numbers. You can also reset the member's election if a mistake is made or if the decision would be reversed. They want to change their mind. This is an example email that a member will receive when they make an election. As a retirement coordinator or payroll coordinator, you will need to communicate to your employees that they need to forward this email to you. So again, this is a summary uh, screenshot of how this transpires. This person is turning in so many vacation days, uh, a personal day. Those are payable benefit days, but the retirement contributions to be withheld is going to be only for the lowest number of days to still get them that 2.5 months of service credit. So you can think of it as the payment's going to go out at $15,067, but we're only going to collect $560, 4% of the value of 49 days over the full 52. And on the right side of the screen, you'll see the unpaid time is going to grant them 4.5 months of service credit. So that's the sick time that's not paid for. The paid time, if they allow us to take retirement contributions from that lump sum payment, will grant them yet another 2.5 months of service credit. So they have the opportunity to establish 7 months of service credit by turning in the levels of benefit time that they are turning in. The next question down simply asks, are you aware of any official misconduct charges pending, dismissed, or finalized against the member, arising from or in connection with their employment with the state of Illinois? This question is asking for felonies at the job against the state of Illinois. If they had, some sort of civil charges or anything in their personal life, that's not applicable here. These are strictly felonies that were accused of while stemming from their job duties. And you'll see that field below there asks to enter any additional information you feel would be helpful to SERS in processing this employer statement. If you have any questions on a member or a retiring employee you have that has some issues in this area and you're not sure what you should do about this, I suggest you contact SERS for direction. By selecting the Save button at the bottom of the page, you're simply saving it. If there are any errors in the form, an explanation will be given at the top of the page for you to address. So you click Save, and let's say you mistyped number of days. You would get an error message listing here simply saying that you maybe typed in an alpha character in a numeric character, and so it's going to kick out an error which says it's going to be one of these fields. One of these fields has to be corrected. You're going to get this for any one missed error. It's not going to be specific to that field. Any of those fields are incorrect, you'll get this box popped up. You have to go back and correct the field. All errors must be resolved before submitting to SRS. The employer must be off payroll. The number of sick and vacation and personal days must be finalized. Remember, you can input numbers, current numbers, prior to their last day, and if they don't take any time off after you've submitted these or first input those numbers should be correct. But let's say you input them around the 15th and they take one vacation day right before they left. Now you have to go in and adjust that number. Okay? If the lump sum sick and vacation time is being purchased, the employee must make the election in member services before the submit to SRS becomes available. So let's say none of the fields need adjusting, but they have not answered how they want their retirement contributions collected. Your submit to SRS button will be grayed out. If you find that changes need to be made after the forms have been submitted to SRS, you will have to contact our offices. With regards to printing the employer statement, you will have to select that completed file, but once the process has been completed, you will be able to view the printable employer statement. Remember, the employer statement 3900 for pensions is the only one you're going to have to complete through your dashboard. We're going to run through the ones that you'll have to complete for a death benefit or a total buyout. It is the old paper 3900 statement, and we're just going to kind of run through that to refresh everybody's understanding of that. This is what the employer statement looks like. You'll see up in the top, this one's identified in the top right corner for the type of claim you're filling it out for. If you had an employee that passed while they were working, doesn't necessarily mean on the job, just they passed while they were still employed. This is the form you're going to have to complete and return to SRS so that we can process their survivor benefits. And again, you'll see the form in its entirety. It mirrors a lot of the questions you just went through on your employer dashboard form, but you answered them through the electronic format of the employer dashboard. So again, you'll select the type of claim up in the corner, input the date for this specific separation of employment, when the agency last paid the member, should be the 15th, 30th, or 31st, and has the employee physically returned to work from the specific leave the member is submitting a claim for. Respond to that appropriately. Again, you've got that reason for removal question that needs to be answered. Again, you're going to have to break out the benefit time and pay attention to the fields. Again, anything prior to 1 of 84, 1/1 of 84, anything after 12/31 and 97, and then anything accrued during that range from 12/31/83 to 1/1/98. This one you'll have to manually break out, and then you'll add up the number of sick days. Again, you're going to have employee base rate, type of employment, total rate, which would include any sort of additional pay this person's receiving, frequency of pay, if there's going to be a 1404 performed, and if there's any known information regarding official misconduct charges. Just to run through real quick, disability benefit information. I know RCs, payroll staff folks, sometimes are used as resources for employees to find out what benefits are available to them should they become injured and unable to work. So just to kind of run through those benefits. SERS does offer three types of disability benefits: non-OC, occupational, and temporary. Non-occupational disability are reasons that a member cannot perform their job duties due to an injury that occurred away from work. So the requirements for non-occupational disability benefits are: the employee must be granted a medical leave of absence. The disability must continue beyond 30 days after stopping work. The member must have 18 months of credited service with SERS. It can combine reciprocal service with TRS or SURS only. This member must use all accumulated sick time, submit non-occupational disability applications and all the required documents to SERS, and SERS will be in charge of determining if the member is disabled. Non-occupational disability continued. When benefits begin and end. So benefits begin the 31st day of absence from work because of disability, and sick time is included in that 30-day waiting period. The 31st day after the medical onset of disability, the last day's wages were received, including periods when sick pay was received. The benefits end when disability ends, when the member returns to work, when half of the service credit is exhausted, when a member reaches age 65, yet if the disability began after age 60, benefits are payable for a maximum of 5 years as long as the member had at least 10 years of credited service on record at the time the disability benefit began. Non-occupational disability half-time ceasing. So if a member non-occupational disability is terminated because the half-time limit is met and the member is still disabled, they are eligible for an unreduced retirement if the member meets these criteria. These criteria would be: the member is age 60 with at least 8 years service credit. They're eligible by default of the retirement eligibility rules. But if a member is 55 with at least 15 years of service credit, they would not normally be eligible to retire just yet, but coming off a non-OC disability claim due to their half-time ceasing, they would be allowed to retire with no reduction applied to their pension benefit. Those rules apply again if the member is only age 50 with at least 20 years of service credit. For Tier 2 folks, the age is still 67 with at least 10 years of service credit, or there is that reduced option for a member that is 62 with at least 10 years service credit, in which case they will receive a reduced pension. Non-occupational disability. So the benefit amount that a member would receive for Tier 1 members is 50% of the member's monthly rate of pay or final average compensation as of the date removed from payroll, whichever is the higher of the two. For Tier 2 members, it is 50% of the member's final average compensation as of the date removed from payroll. The benefit amount is reduced by Social Security disability benefits or Social Social Security retirement benefits if the member is at full retirement age, regardless if the member is receiving Social Security or not. And again, remember FAC stands for Final Average Compensation. For Tier 1 members, it is the average of the 48 highest consecutive months of service within the last 10 years. For Tier 2 members, it is the average of the 96 highest consecutive months of service within the last 10 years. FAC is the same as AFC. Those two terms are interchangeable. It just depends on what system you're talking to or whomever in the building. FAC stands for Final Average Compensation, and AFC stands for Average Final Compensation. So it's just a different arrangement of the same words. Occupational disability. This disability is considered to have rendered a member unable to perform their work duties while doing their job duties. So the requirements for OC disability benefits are a little different. You first have to file a claim with Illinois Workers' Compensation Commission to determine if your disability is work-related. You must be paid TTD benefits from Illinois Workers' Compensation or receive a workers' compensation settlement. You must submit an occupational disability application to all required documents to SCRS, and SCRS determines you are disabled. Remember, for OC disability, it's going to seem like you're doing a double application because you will have to submit paperwork to Illinois Workers' Compensation Commission as well as SCRS. For occupational disability, when it begins and ends, the benefits begins when SRS determines a member is disabled. You receive benefits under the Workers' Compensation or Occupational Disability Act. Member is removed from agency's payroll, and SCRS can pay the same days as workers' compensation pays. For occupational disability, disability ends when the disability ends, when a member returns to work. When workers' compensation stops paying benefits, SCRS has to follow suit and stop paying benefits. When a member turns age 65, or if the disability begins after age 60, benefits can be paid for a maximum of 5 years. Occupational disability benefit amounts. For Tier 1 members, they are paid 75% of a member's final average compensation or monthly rate of pay on the date removed from payroll, whichever is greater. For Tier 2 members, they are paid 75% of final average compensation on the date they are removed from payroll. The benefit amount is reduced by any payments made under the Workers' Compensation Act or Workers' Occupational Diseases Act. Basically, what workers' comp is going to pay you is 68%. Then SCRS will backfill with 7% to where the two benefits equal the 75% of what you're entitled to. Temporary disability benefits. This benefit is only available when there is a disputed workers' compensation claim and the member is filing an appeal with workers' compensation. Members are not eligible for a non-occupational disability if they are appealing a workers' compensation denial or suspension of TTD benefits. Members are not required to exhaust their sick time for temporary disability benefits. Requirements for a temporary disability benefit. If a claim is filed, if a claim for TTD is denied, the member must file an appeal with the Illinois Workers' Compensation Commission, have at least 18 months of credible service with SCRS, and that can include TRS or SURS reciprocal service to meet that 18-month requirement. Submit a temporary disability application and all the required documents to SCRS. SCRS will then be responsible for determining if the member is disabled, and they can begin receiving payments on the 31st day of the last day they were paid by the agency. An approved medical leave of absence is not required for a temporary disability benefit, and members do not have to exhaust their sick time for either a temporary or occupational disability benefit. So temporary disability eligibility. If TTD is terminated, member has to file an appeal with the Illinois Workers' Compensation Commission. They must have those 18 months of service credit with SCRS or TRS or SURS. Submit the temporary disability packet and all required documents to SCRS, and SCRS determines if you are disabled. Temporary disability benefits will be offset by any Social Security disability payments received or retirement benefits eligible to receive once the member has reached their full retirement age. Temporary disability benefits, when they begin and end. Benefits begin on the 31st day from the date the member received any compensation if the claim was denied by workers' comp, or benefits are payable the next day after the cessation of TTD benefits. When they end, when the disability ends, when the member returns to the state or resumes gainful employment, when half of the credible service has been exhausted, when the member reaches age 65. If disability began after age 60, a member can receive benefits up to 5 years maximum, as long as they had at least 10 years of service credit on their account when the disability began. The temporary disability amounts. For Tier 1 members, it is 50% of the member's monthly rate of pay or final average compensation as of the date they were removed from payroll, whichever is higher. For Tier 2 folks, it's 50% of the member's final average compensation as of the date removed from payroll. The benefit amount is reduced by Social Security disability benefits or Social Security retirement benefits if the member is at full retirement age, regardless if the member is receiving Social Security or not. So regarding disability, the reporting of employees returning to work. Disability returning to work. It is both the member and the agency's responsibility to notify SCRS when a member returns to work. If the member was on a non-occupational benefit, returns to work, and they become disabled from the same injury or illness within 60 days, the 30-day waiting period is waived and the benefit can begin the day after they were last paid by the agency. If a member is off work on a non-occupational disability and they suffer another injury or illness, their disability can be extended after medical has been supplied and approved by SCRS. There would not be another 30-day waiting period as long as they never physically returned to work. From the dashboard, you'll see the Employees on Disability tab or section at the bottom of the at the bottom of the employer's dashboard. Select Manage Employee on the disability from the menu. Select one of the three options and enter that specific date and click Submit. To put out a future date will not be allowed. The icon will show indicating the member has been reported back to work. Hovering your mouse over the display will display a tip tool to confirm. The employer statement for disability forms. Remember, this is a paper form. You will not complete this through your dashboard. Here you'll see what a 3900D employer statement for disability form looks like. And we're going to run through the fields like we did with the death or termination refund 3900. You'll see you have to identify the type of claim, input the date when the member had last physically worked, identify when the agency last paid the member, whether it be the 15th, 30th, or 31st. Has the employee physically returned to work from a specific injury? Answer the medical leave of absence question. The date the agency takes action to remove the member from payroll. And then please note on this one, question 5, for non-occupational claims, this number needs to be 0 as they have to use up all of their unpaid sick time before they can be eligible for a disability benefit from SERS for non-occupational claims. Again, run through the full rate of pay, work status, total rate of pay, which would include any longevity or additional pay. And it's okay that this is different from 6A. That's why there's two fields. Identify the pay increment, the pay frequency. And then identify question 7 with applicable answers. And again, with regards to question 9, this is only asking about felonies at work against the state of Illinois. In addition to the 3900D, you will have to we are required to fill out a 3935, which is a job duty statement, just going down through the questions and answering them appropriately. Zoomed in version on the questions. What the claim notification looks like. The claim notification form looks like. This one's specific to disability. Again, the top section you'll have to answer or respond with member information. In the lower section, you're going to identify what type of disability this person's going out on. And just please note, agencies should never put a member back on payroll when they are on a disability benefit. Returning to payroll is not the same as physically returning to work. Okay, then we're going to kind of walk through the leaving SERS or termination refund function. Remember, when a member resigns, is discharged, dismissed, or laid off from state employment, they may choose to withdraw their contributions or leave them in SERS. That's a decision they make. But the member must be off payroll for 14 days to be eligible for a refund of their contributions. If a member leaves their contributions in SERS, a member with at least 8 years of service credit will qualify for a monthly pension upon reaching retirement age for Tier 1 folks. For Tier 2 folks, they have to have 10 years in the system to be eligible once they reach a certain age. A member with at least 1 year of credible service, but less than 8 or 10 years of service credit with SERS may be eligible for a monthly benefit upon reaching retirement age if they have service credit in another reciprocal system. But the combined service credit under the reciprocal system must meet each system's minimum service credit and age requirements. So that might be why some folks choose to leave their contributions on file with SERS. They move to another position where they know they eventually plan on retiring reciprocally. But it does have to be at least a year. So if somebody separates with only 6 months, you may want to share with them that they don't have enough service credit with SERS for that time to be used in any reciprocal calculation. Leaving SERS termination refund. If the member has their contributions refunded, the member will receive no interest on their contributions, and they will forfeit all rights to future benefits. This is what the termination refund agency certification form looks like. And again, all you're attesting to us by filling out this form and returning it to us is you're identifying the timeline of when the person separated, the last payroll you processed them on, identifying to us if we are able to go ahead and begin processing the termination refund. Again, a close-up snapshot of the form itself reveals just some of the fields you will have to complete, sign off on, and return to SERS. Returning to state employment. Returning to SERS. Returning to work after retiring. If a member returns to state employment on a permanent basis after retirement, they should notify SERS immediately. There are 2 methods of returning to state employment that may not affect the continuation of an SERS pension: contractual, Tier 1 folks only, and non-permanent for both tiers. Returning to SERS continued. Reciprocity. If a member receives a pension from more than one Illinois Public Retirement System which participates in the Retirement Systems Reciprocal Act, they must notify each retirement system. Each reciprocal system has specific rules to determine if retirees are eligible to receive pension benefits during reemployment. For Tier 1 retirees, receiving a proportional annuity from another reciprocal system that returns to service under that system will have the proportional annuity payable from that system and SERS suspended for the duration of that service. Tier 2 retirees who return to work with that system that participates in Retirement Systems Reciprocal Act will have their pension suspended even if the retiree did not retire reciprocally. Regarding contractual employment for Tier 1 members, if a member returns to state employment on a contractual basis after retiring and were not a participant in the 2002-2003 Early Retirement Incentive ERI program, or if the member returns to employment in the private sector, their SERS benefit will not be affected. Early retirement incentive participants from the 2002 to 2003 are not allowed to return to work on a contractual basis. For Tier 2 folks returning on a contractual employment, if a member returns to state employment as a contractor with the employer from which they retired, their benefits shall be suspended. Non-permanent reemployment. If a retiree's employment with the state will last for 75 or less working days per calendar year, remember, any part of a day is counted as a full day, they will continue to receive their pension payments. During employment, they make no contributions to SERS, but they must contribute to Social Security. If a member works more than 75 working days, their pension benefit will end on the 76th day and they will resume contributing to SERS. 75-day employment requires certifications to be submitted to SERS by their agency. Permanent reemployment. If a member is reemployed by the state on a permanent basis, they won't be eligible for pension benefits while working. They will make contributions to both SERS and Social Security during the employment and earn additional service credit. After the member again retires from state employment, they must reapply for a pension. The new pension amount will be the benefit earned before reemployment plus the pension amount earned during reemployment. If the member re-enters state service within 3 years after retiring, they may qualify to have a new retirement benefit computed as if they never retired. To qualify, they must repay all of the pension benefits they received plus interest. The repayment may be made in a lump sum or by installments paid within 5 years after the reemployment or before the next retirement date, whichever is first. Returning to work after receiving a refund. If a member returns to state employment after receiving a refund, they may repay their refunded contributions with interest and have their previous service credit restored after they complete at least 24 months of credited service subsequent to the date of the refund. Credited service from another public retirement system under the Retirement Reciprocal Act can also be used to meet the 2-year requirement. So will you need to continue submitting Form 3904, a report of retiree non-permanent employment? No, all retirees employed in a non-permanent position need to be reported under the Returned to Work Retirees task at the end of each payroll period. The dates the retiree worked should be entered and certified. Each payroll period needs to be certified. You can certify all remaining payroll periods as final once the retiree has completed their contract with the agency. All retirees' reported days worked and certifications need to be submitted by February 15th of the following year. Do I need to continue submitting Forms 3905, certification of retiree return to state employment? No, 3905, certification of retiree to state employment is no longer required. What days should be reported? Any fraction of a day worked is considered a full day. If the retiree is paid for a holiday, sick day, personal day, etc., It is the same as if the day was worked and must be reported. Can I make a correction to reported days worked for a payroll period after the certification has been submitted? Yes, you are allowed to add an adjustment to the reported days worked and recertify all the way up through until February 15th of the following year. After February 15th, you will not be able to modify any of the data entered for previous calendar years. What happens if the retiree exceeds the 75-day limit? When a retired non-permanent employee exceeds 75 working days during a calendar year, their SERS pension is suspended, and their employment status must be changed to permanent. Reciprocal system pensions are also suspended. The permanent status is effective the first pay period following the date the employee completed the 75 working days in a calendar year, and SERS retirement contributions must be deducted from salary. If the non-permanent employee participated in any alternative retirement cancellation payment or the ARCP program buyout and exceeds the 75-day limit or returns to full-time employment, the employee is required to repay to SERS the ARCP portion of their buyout within 60 days of the return to work date. Reciprocal systems pensions are also terminated. Retirement deductions must be made from their salary for SERS effective the first pay period following the date they completed the 75-day work. If the non-permanent employee participated in the Contingent Lump Sum Incentive Program, or the C-SLIP, and exceeds the 75-day limit or returns to the full-time employment, the employee is required to repay to Central Management Services the full amount of the incentive, including any amounts withheld for taxes, etc. The employing agency should contact Central Management Services personnel for clarification of employment restrictions. This section we're going to talk about reporting the return to work retirees. Remember, this is now handled through your dashboard. So down there you'll see return to work retirees. Select that category. The return to work retirees list displayed. The return to work retirees for your agency. You can change the calendar year by choosing from the drop-down menu in the upper left-hand corner. You can add new retirees by clicking the blue button in the right-hand corner labeled Add New Retiree. Retirees are listed by retiree name, Social Security number, agency reported days worked, total reported days, and certification status. Warning icons will appear next to the retirees' reported days worked to alert you as they approach the maximum 75 days per calendar year. A yellow icon will appear when the member's total worked days have reached or exceeded 60 days, and a red icon will appear when the member's total work days exceeds 70 days. All retirees, currently retired or ERI buy and quit participant, alternative retirement cancellation payment participants, or contingent lump sum incentive payment participants that have returned to non-permanent employment on a 75-day contract need to be reported under the returned to work retirees task for each calendar year. January 1 through December 31 represents a calendar year. You can also search for recent retirees, members who have retired within the last 6 to 8 weeks, but only using their full 9-digit Social Security number or member ID number. You can access specific details of your return to work retirees' records by clicking on their name in the return to work retiree listing. Those details are listed by pay period. Each pay period includes the reported days worked and the certification information. You can report dates, certify pay periods, and add adjustments to certified pay periods. Note that the add adjustments and certify pay period commands will be disabled if it is currently past the record cutoff date, February 15th of the following record's calendar year. Additionally, the total days worked reported by this agency and the retiree's total days worked will be displayed at the end of the listing. Each pay period for the retiree should be certified once the reported days for that pay period have been entered. The certified pay period will display the read-only version of the reported workdays. The deadline for certifying pay periods is up to the February 15th of the next calendar year. Please review work days entered and certify the pay period. You can view the details of the certified pay period at any time from the pay period listing by clicking the certified status for the pay period. Returning to the retirees list, selecting Manage Retiree option next to each retiree record will open a pop-up providing more details on the retiree and further actions to take. If the retiree is finished working for the calendar year, the Certify All Pay Periods command will allow you to certify all the retiree's pay periods with days entered for the calendar year. Regarding service purchases, optional service purchases is the ability for certain members to buy and add additional service credit to their accounts. You cannot arbitrarily just buy time, but some members may have some times that they worked for the state and did not contribute. One of the most common ones for Tier 1 members is a qualifying period, and here you'll see when they were enacted. Short periods are another one. It's just a shorter version of a qualifying period. And again, any previously refunded service credit, but that only becomes available to purchase and reestablish after you've resatisfied 24 months of service credit within any of the retirement systems. Previously refunded time can be bought in any monthly increments, as can military time up to 48 months. Service for leaves of absence can also be purchased as long as the leave of absence was for less than 1 year. And the reference to sick and vacation days can only be purchased at the time of retirement. The Service Purchase Estimate Request module allows you to submit service purchase requests on your employee's behalf. This module can be accessed through the employer dashboard. So you click on the service purchase estimate and you will go through the same process they would if they went through their member services website under their service purchase tab. As an employer, you'll be able to see the service purchase estimate requests made by your employees. The service purchase estimate request list is separated by 3 tabs: New, Pending, and Completed. In regards to service purchases, the new estimate request begins another or an additional service purchase request, you can search for employees by entering the first their name, last their full SSN, last four, and their any part of their name, their member ID, or any combination of the criteria, and clicking the search button. The employee search will return the number of total records found, a list of employees that meet that search criteria. Again, so if you have a large agency, you might want to put in as much information to make it as detailed so you know you're only getting that employee. If you put in a common last name, there's a possibility of you pulling up more than you care to search through. You're going to list their enter their planned retirement date. It does have to be a future date. And hit create request. Once a new request is created, you or the employer cannot create another estimate until the review has been completed by SCRS staff. If you are trying to add a request when a member already has an active request, you'll get an error message saying that the member already has an active service purchase estimate request submitted. Doesn't mean they can't do it again. It's just until that initial one is completed, they will be locked out from submitting a second estimate request. So what you're going to do is click on Add Optional Service button to continue the request. You can update the planned retirement date or add an optional additional comments if you would like. You click on the Add Optional Service button to the Add Optional Service you would like to estimate for your employee. The Save button will allow you to save the request without submitting it. The Submit button will be enabled when at least one optional service request has been added. Both you and your employee can access, edit, submit, and revise the request. So if this person wants you to help them submit a request for, let's say, a qualifying period and a refund, that's where you're going to enter the qualifying period request, hit save, go back through and request the refund, hit save, and then after you've requested both of those, then hit the submit request. Both requests are now submitted. So depending on which optional service purchase type you're looking at, there are different criteria you have to add. The start date is required and must be a date in the past. The end date is required and must be a date and greater than the start date. So if your person's wanting to submit a request to calculate a cost for their governmental public service internship program time, you're going to have to put a start date and end date and select Add Government Public Service Intern Program Request. That will submit it. If you're going to request the same for any legislative staff internship that this member may have worked, again, you're going to need to add a start date and an end date, and then add that to the request. So if you're going to select military time, you'll be instructed on how to submit the DD-214 as a supportive document. The start date is required, the end date is required, and you can add that. It will not begin, or the accounting service department will not begin processing any military service credit purchases until the DD-214 is submitted. So you might want to remind them or recommend to them to submit this as they're submitting the request itself. That way the accounting service department has everything they need to begin processing that cost. If your member's wanting to buy their qualifying period, You'll notice here you do not need the begin or the end dates, as the service accounting service department knows to immediately look at the prior 6 months to this person submitting retirement contributions as the range to find their qualifying period. So you literally need to pick qualifying period as the service purchase type and then add qualifying period, and it's submitted. Same thing with the short period. They do not need a begin or end date. They simply know it's a period ahead of their membership date in which contributions were not collected, and they have all the information. The accounting service department has all the information they need to process that cost. When your employee is referencing or wanting to assistance in requesting the cost to repay a refund, the start date is required and must be in the past. The end date is required and must be a past date that is greater than the start date. You will need to identify the agency of what they worked for before taking that refund, and click on the Add Repayment of Refund tab to submit that request for cost. Once these are submitted, you can edit or delete any of these requests. You can update the optional service by clicking on the edit button, or you can delete it from the request by clicking on the delete button. The edit button will not be available for qualifying or short periods since there is nothing to edit. Once you click the submit button, you will see an informational message indicating the request has been submitted. This request can still be revised until it's considered under review process. You or your employee can still edit this request up until the SCRS staff has accepted and begun the review process. So you'll see in this example, there's a qualifying period in the middle. There's no way to edit it. But if this person says they don't want to deal with it, you want to delete it, you can, because it still says submitted for review. Then you would just simply hit the delete button and submit revised request. Once SCRS has begun the review process, the status will be updated to a review in process status identified on their service credit purchase field. The request at this time will be locked and no more changes will be accepted to it. This indicates that the accounting service department is working on calculating this cost for this member. When the request has been fully reviewed by SCRS staff, you will see the status updated to completed. If the employee has eligible service to buy, they will receive an offer letter. If the member has no eligible service to buy, they will receive a denial letter. Once the request has been completed, you or your employee can submit a new estimate request. So it goes from submitted to review in process to completed. And that is the optional service credit purchase processing timeline. Payroll deductions. And again, payroll deductions module provides you the ability to view and track payroll deductions for your employees. And it is accessed through your employer dashboard. Here you see it on the second line. As an employer, you will be notified by email if your employee requires payroll deductions. You can access the payroll deduction listing and track payroll deduction progress on Member Services website. The payroll deduction list is separated by 4 tabs: Installment Setup, Lump Sum Setup, Upcoming Payoff, and Payroll Completed. As you'll see, those tabs run horizontally across your page. Installment Setup tab displays receivables that need payroll deduction set up. The Lump Sum Setup tab displays receivables that need lump sum sick and vacation payroll deduction setups. The Upcoming Payroll tab displays receivables that are going to pay off in 60 days. And Payment Completed tab displays receivables that have been paid off and require payroll deductions to stop. So the installment setup, you can access the installment setup list by selecting Installment Setup tab. The installment setup list displays a list of employees whose receivables require payroll deduction setup. The list will display a member's name, redacted SOCH, employer identification number, start date, and payment amount that you have to set up for your employee. Installment setup warnings. So installment setup list will display a red warning icon next to the start date if the installment setup is past due for the employee. Don't be alarmed if you have already set up the payroll deduction, but see the red warning icon. It may take accounting up to 2 weeks to post the payments. The employee should drop off from the list the next pay period. However, if you haven't set up the payroll deductions, the employee will remain on the list until the first payment is received and posted by SERS. The installment setup list provides a way for you to track installment setup progress for your employees. You can indicate that you have completed the setup by checking the box under Payment Setup Complete column. Once you do that, a tooltip will show you when the setup is completed and who completed the setup. This function is especially useful for larger agencies that have multiple payroll coordinators managing the installment setup list. So here you'll see, if you hover over that I with the blue dot with the I in the middle of it, it'll say payment setup completed by John Doe on 10/6/21. That way you know it's already on and who did it. You can access the lump sum setup list by selecting Lump Sum Setup tab. The Lump Sum Setup list displays a list of all employees whose receivables require lump sum sick and vacation payout deduction setup. The list will display the member's name, redacted Social Security number, and start date, and the payment amount that you have to set up for your employee. Remember, these are only setups for people who are retiring and maybe utilizing their lump sum payout to pay optional service credit billing. And again, this acts similarly to the lump sum setup functions. So you'll see the lump sum setup will display a red warning next to the start date if the lump sum setup is past due for the employee. And again, if you've already set this up, the deduction, you'll see a red icon, but it sometimes takes accounting up to 2 weeks to post that payment. The employee should drop off from the next pay period. However, if you haven't set up the deduction, the employee will remain on the list until the payment is received and posted by SERS. And once again, you can keep track of these by utilizing that payment completed column. The lump sum setup list provides a way for you to track the lump sum setup progress for your employees. You can indicate that you have completed the setup by checking the box under the Payment Setup Complete column. And again, once you do that, it'll give you that pop-up window to see who did it and when. You can access the Upcoming Payoff list by selecting Upcoming Payoff tab. The upcoming payoff list displays a list of employees whose receivables are going to pay off within 60 days. The list will display a member's name, redacted SSN, and payment type, whether it be post-tax or pre-tax, the payoff date, and the final payoff amount. You may need to make some payroll deduction adjustments on your employee's final payment. It's rare that a service credit purchase rounds off to be perfectly a whole number on that final payment. So that final payment, you'll see on this display, the final payment's only $219.56, whereas their monthly or per pay deduction might have been $220 even. So you may need to make adjustments for that final payment. Just keep that in the back of your mind when it comes down to that last payment. The upcoming payoff list will display a yellow warning icon next to the final payment if the employee is missing more than 2 payments. So be conscious of that. If the person went out on a leave of absence or something and was unable to keep up the payments and did make arrangements to have those caught back up, that final payment amount may need to be adjusted above what the final payout amount is looking. But yet again, the upcoming payoff list provides a way for you to track the payment adjustments progress for your employees. You can indicate that you have completed the final payment adjustment by checking the box. Once you do that, the tooltip will show you when the adjustment was completed and who made the adjustment. And lastly, we have the payment completed list display, as this displays a list of all employees whose receivables have been paid in full, and the payroll deductions will need to stop. This list will display again the member's name, redacted SSN, payment type, and payoff date. The payment completed list will display a red warning icon next to the payoff date if the employee has paid in full and has passed the payoff and has gone past the payoff date. Again, don't be alarmed because it may take accounting up to 2 weeks to post the payment. The employee should drop off from the list after the next pay period. If you haven't stopped the payroll deduction, please ensure to do so as soon as possible to avoid an overpayment. So remember, you make that last payment on the September B payroll for this person. It's not going to come into SCRS till maybe October 15th. It may take another 10 days, 2 weeks to post to their account. So that red dot would still stay on there all the way up through almost the end of October. But once that payment comes in and posts to their account, you should see it drop off and go to paid in full. And again, the payment completed list provides a way to track the stop payment progress for your employees. You mark that and it will show you who completed it as of what date. Talking about the tiered determination requests. The tiered determination request task module provides you the ability to track and view processed tiered determination requests and can be accessed from the employer dashboard. The tiered determination request list displays the pending and completed tiered determination requests that have been submitted to SCRS Accounting Division for review. The list of pending requests will be any requests submitted that has yet to be completed. The list of completed requests, however, will only show all completed ones that have been completed within the last 90 days. You can change whether you are looking at the pending or the completed list by choosing it from the drop-down menu on the top left side. When doing an SCRS member lookup and your results yields no matches, you can start a new hire tier determination request. Clicking the new hire tier determination request link will open a new view to input data for the new member. The new view will allow you to select the agency the new hire is for, input the new hire's first name, last name, gender, birth date, social security number, and any reciprocal system the new hire states he has been previously with. For social security number, we do require inputting the whole number twice to reduce accidents. For the reciprocal systems, check the box next to the applicable system. If they do not have any reciprocity claim, then do not select any reciprocal systems. Once completed, click the Submit button to send the request to the SCRS Accounting Division for review. There is no need to submit the paper tier determination form. If you click the Submit button early before the required fields are filled out, you will receive an error message stating which fields are required or if any data is invalid. If you enter and confirm an SSN that is already in our system, you will be notified to try searching again for the member specifically using their SSN. After clicking the Submit button and no errors have occurred, there will be a screen showing that the request has been submitted. If any errors, apart from the ones already mentioned above, did occur, the message box will be displayed stating what the error is. When your agency has employees who need their term determined, Social Security admins can request SCRS to perform a tier determination. This process is being implemented to correct roles that have been incorrectly assigned. Those who have been assigned as payroll coordinator or signature designee to perform tier determination requests can now be removed by following step 1 and reassigned to tier determination user by following step 2 for new tier determination users. You can proceed to step 2. Workshops and webinars. Retirement counseling. Just so you know, SCRS offers phone and in-person retirement counseling appointments for members at the Chicago and Springfield offices. Appointments are offered in-person appointments Wednesday through Friday, 9 through 4:15. Phone appointments are offered Monday through Friday, 9 to 4:15. Appointments are limited to a maximum of 3 per calendar year. To book an appointment, call SCRS at 217-785-7444 or email us at sers@srs.illinois.gov. Regarding pre-retirement workshops, SCRS provides workshops and webinars that are available to members. Given the nature of these workshops, the limitations of conducting such workshops, and the significant demand from the membership to attend such workshops, SCRS has implemented a policy that a member may not attend multiple workshops within a 12-month period. This policy enables the system to offer this valuable service to the membership in an equitable manner. A reservation made in violation of this policy will be canceled. The pre-retirement workshops that are offered, There are four that you'll see here. Investing in your future is thought to be for employees who are more than 15 years from retirement. The countdown to retirement is created for members within 3 years of retirement. Sworn officers would be for sworn officers only. So if you are not a sworn officer, that those workshops are specifically designed for the folks that are they're in the alternative non-coordinated positions. And the pension application workshop is for folks who are within 6 months of retirement. Disability webinar. SERS is pleased to announce a webinar dedicated exclusively to SERS disability benefits. This disability webinar helps understand the disability benefits that SERS offers to its members. This workshop will help members understand the eligibility requirements for each type of SERS disability benefit. Members can view the SERS disability webinar on our website at https://ilsrs.illinois spelled out .gov/. So this slide brings us to the end of our workshop. I hope everybody finds it beneficial. And thank you for your patience while we present you this information. Have a good day.